Ever wondered how some traders make money in crypto without taking big risks? The secret is crypto arbitrage trading. Today, we'll break it all down: what it is, how it works, tools you can use, and risks to watch out for. By the end of this video, you'll have a solid strategy to start making profits with arbitrage. Let's dive in. Crypto arbitrage is simply buying a cryptocurrency on one exchange where the price is lower and selling it on another exchange where the price is higher. The difference in price is your profit. Why price differences happen? Liquidity, market inefficiencies, location-based price variations. Example: buying BTC for $50,000 on exchange and selling it for $50,500 on exchange B. Spatial arbitrage, buying on one exchange, selling on another. Triangular arbitrage, exploiting price differences among three trading pairs on the same exchange. Statistical arbitrage, using AI and algorithms to detect opportunities. DeFi arbitrage, leveraging price inefficiencies in decentralized exchanges. DEXs, arbitrage bots, for example, Pinex, BitScout, Hossamline, automate the process. Price monitoring tools, for example, CoinGecko, CoinMarketCap, track price differences. AP, Zen trading scripts, automate buying and selling. Transaction fees, high fees can eat into profits. Withdrawal delays, crypto transfers between exchanges take time. Liquidity issues, some exchanges have low trading volume. Regulatory restrictions, some countries limit crypto transfers. Choose reliable exchanges with significant price differences. Compare trading fees and withdrawal speeds. Use an arbitrage bot or manual strategy. Start with small amounts to test the process. Automate the process if it works consistently. Crypto arbitrage trading can be a great way to earn consistent profits if done right. But remember, always account for fees, delays, and risks. If you found this video helpful, give it a like, subscribe for more crypto content, and drop a comment if you have any questions. See you in the next one. Subscribe, like, and comment.